This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. This is Not Your Advisor with NYU Grad on Monday, October 28th. I know a lot of folks went trick-or-treating over the weekend because Halloween is on a weekday this year. So hope you had a safe and happy early Halloween with you and your family. New York was kind of hectic. I saw a lot of kids in costumes, so that was pretty cool. But let's jump into today's session. It was as exciting as doing laundry outside of OKLO and Lightbridge, which are just on fire for the nuclear powering AI play. But looking at macro, let's jump right in. So for new highs, we had 295 versus 123 new lows. Let's see, 68% of stocks were advancing today versus 28% declining. 44% of stocks on the NYSE were below their 50-day moving average. 35% were below their 200-day moving average. Looking across the mega caps, we had a mixed bag today, and I'll go over the context of it, but taking a look at a few of them, Microsoft didn't really move much, down 0.36%. Nvidia was down 0.75%. Tesla was down 2.5%. Apple was up 0.86%. Google and Meta were also up 0.8 and 0.86% respectively. That really doesn't tell much of the story. When we start to peel the onion on sector performance, we get a clearer picture of what led. Financials were up 1.25% for the session. Basic materials were up 0.85. Communication services up 0.8. Utilities were up 0.67. Industrials up 0.64. Consumer cyclical up 0.63. Real estate was up 0.36. Healthcare was up 0.32. Where is tech? Tech was down 0.09%, and energy was down 0.81% today. As I noted, OKLO made lifetime highs today. It was up 28% to $25.36. Lightbridge was up 23% to $9.08. So those really were on fire on heavy volume today. One thing I wanted to note, just kind of a housekeeping item. In honor of the U.S. Election Day, November 5th, which is 7 days away, I have turned on the 7-day free trial for premium content. All you have to do, if you're a free subscriber, you could go to the link, or when you get into a paywall section of the Substack, you'll be presented that offer. All you have to do is pick monthly or annual. You will need to have a credit card on hand. It's not billed until after those 7 days, so you can cancel prior if you don't see value. And if you missed it this weekend, I will share in the show notes the 45 plus stocks, all bullish setups. I included it for a few for free as well as a few for premium. So if you sign up for that 7-day free trial, you'll get access to all of them. Just a quick heads up also on the premium side, I do share intraday updates on what I'm watching in the session. And this morning, I had shared with the premium members on the Substack chats that basically today was setting up to be another overnight ramp on zero volume, and then a intraday maintenance session where they either distribute or just maintain the previous night's gain, and it just goes sideways. And that's what I was looking at and potentially expecting, and that's exactly what happened. You'll also notice in the show notes, I'll include for the NQ and the ES futures, pretty evident wedges here, bearish wedges that are potentially setting up to break down. You want to watch to see how we react to the lower edge of these wedges. The SPY has already broken down from the wedge and is back testing it. So that's not too bullish right now. Obviously, there's a slew of earnings this week. You have majority of the Mag 7 reporting, so that's going to be important. I still maintain my stance that it is not a time to be reckless. You want to stay in safety. You do not want to do any YOLO long type activity right now. There's no volume. And since Wall Street Jesus spoke on September 18th, we have been in a pattern of overnight ramps on very little volume and daytime distribution. And I suspect this is going to continue until we have some resolution going into the U.S. elections next week. Whoever wins, I suspect, will have some volatility. So it's going to be like this, I think, till next week, unless some type of event, outlier news event comes out. With that said, I want to walk through what was strong, what was weak for the free members before we jump into the premium section. What else stuck out? Financials, as I mentioned when I was going through the sectors, led, which is constructive. You can't have a bear market if financials are rallying. But tech is asleep. It's just trading sideways. So taking a look at the S&P 500, let's go through what was strong today. You had Albemarle up 4.9%, Carnival Cruise 4.8%, Steel Dynamics 4.7%, 3M 4.4%, Nucor 4.4%, Momentum Holdings was up 3.9%, Citigroup was up 3.9%, Genuine Parts Company was 3.6%, MGM 3.3%, Moderna 3.2%, First Solar was up 3.3%, CarMax was up 3.19%, KeyCorp was up 3.05%, Vistra Energy was up 3.04%, Caesars was up 3%, Synchrony Financials was up 2.9%, Citizens Financial 2.9%, Dover 2.93%, State Street 2.9%, Ford Motor 2.9%, Ralph Lauren 2.8%, Norwegian Cruise 2.7%, Discover Financials 2.7%, NXP Semiconductors up 2.6%, Global Payments up 2.6%. In the NASDAQ, you had ARM Holdings up 4.2%, Cadence up 4.7%, Moderna 3.2%, PDD Holdings 2.6%, Advanced Micro Devices AMD up 2.25%, PayPal was up 2.1%, Marvell was 2.19%. On the downside for the S&P 500, you had APA Corp down 4.59%, Centene 3.8%, ResMed 3.65%, Diamondback Energy 3.3%, Molina Healthcare 3.1%, Lam Research down 2.85%, GE Healthcare Technologies 2.85%, Boeing down 2.7%, Tesla down 2.6%, Cooper Companies down 2.22%, GE Aerospace down 2.09%, Keurig Dr. Pepper down 2.08%. I think they just acquired a drink company out in Las Vegas. Dexcom down 1.9%. In the NASDAQ 100, Diamondback Energy is down 3.3%, Lam Research down 2.8%, Tesla 2.5%, and Keurig again down 2.08%. So continue to watch macro, the forest, not the trees, obviously earnings, and watch yields. The 10-year yield is spiking despite all of this talk of the Fed rate cut from September 18th. I will see you all after the Tuesday session. Premium members, please stay on. I have about 20 plus charts to walk through with you today. That's my train.
Stand clear of the closing doors, please.